This is the Friday, July 28th, 2017 version of the Market Plus segment. Joining us now is Ted Seifried. Ted, welcome back.
Hey, thanks for having me, bud.
We're always glad to have you, and we're going to kick this right off. We got a lot of questions. People want to pick Ted's brain. So we're going to start with Devin Marion in North Dakota. He's on Twitter at Saratoga Farms. Devin notes that hard red spring is inverted past December of 17. Does the trade already expect higher acres in 18? And can it add carry through harvest?
Those are great questions, Devin. So first of all, the reason why we have an inverted market almost always is because we're in a bull market. And when you've had such a large move, and obviously we're off highs by a fair amount now, but when you've had such a large move, then yes, we generally go inverted. One of the reasons we do that is because we start thinking, okay, what does high price do to this market? Well, it very likely will add acres. And then I've been talking to a lot of guys who likely are going to be adding acres. So to answer that question, then yes, absolutely. Now, as far as what we do during harvest is really going to depend on what we find out there. If we start seeing yield come in 38, 40 or above, well, then we've got an issue, and then that inversion is going to kind of come away, but that's not necessarily a good thing because that just means prices are coming down and the front's coming down faster than the back. If we're finding issues and we're seeing bigger problems than what the recent crop tour has suggested, and certainly what the USDA has suggested, that inversion is only going to get stronger. Because again, yes, we're probably going to add more acres and we're going to price out some demand at higher prices. So that's why you get that inversion in the market, and it's all going to depend on which way the market goes from here.
Now, as a rule of thumb, when you see a market it's inverted, we saw it in corn, soybeans 2012. How aggressively do you want to be selling that next year's crop during that inversion? Well,
it depends on what the situation is that put us there and how long we're expecting it to last. In 2012, hindsight's always 2020, but I was in North Dakota at Big Iron in September of 2012 saying, hey, we need to look, I know it's not the same price as what we're seeing in the front months, but we need to look at selling our next year's crop, the year after that, and the year after that. Because if it's a crop issue, very quickly we can fix that problem by adding more acres the following year and also demand destruction. And we had both of those in 2012. So you really want to be looking at those deferred months because when the pendulum swings back, a lot of times it can be fairly violent as well.
You bet, because that's a story that brings in outside money. Let's sell these markets that are in a downtrend.
Yeah, that and the touchy one is demand destruction. If we're able to destroy demand, it takes a lot to buy that demand back. We have to see low prices for an extended period of time in order to do that.
Okay. Our next question is from Tim in Crookston, Minnesota. And Tim is asking a question that a lot of folks in North Dakota and South Dakota want to know the answer to. And I know you're not a meteorologist, Ted.
Okay.
But Tim wants to know, will it ever rain again?
Yes, Tim, it will rain again at some point.
Yes.
When, I can't tell you. And when it does, well, that'll have a fairly big bearing on the market. Although I've seen a lot of things in North and South Dakota that I don't think are coming back. And if they do, they're not producing much. So yes, Tim, it will rain again at some point.
It will rain, but we will see movement. I mean, we've seen that every time a front has come through.
Yeah.
All right. Jeremy in Lanark, Illinois wants to know, he's on Twitter at jflickema. Jeremy notes, and we talked about this on the program a little bit, but now you get to expand. Jeremy says, as yield moves to the 160, 165 area, how much demand do we need to take off the balance sheet? And does the balance sheet not look as tight with that reduction?
Okay. I love that question, Jeremy. First of all, I don't know if we need to take demand off the balance sheet if we see that yield come down to the low 160s, mainly because, well, actually two reasons. One, we've still got fairly big stocks, and it's not going to put us in a super tight position. So I don't think we have to start destroying demand. We're talking a lot about demand destruction today. I don't think we need to start destroying demand after 3 years of record crops, really, even if we see yield head down towards that lower 160. Now, the second point there is that we're already seeing demand destruction happening in other ways, and that's coming from South America. Right now, the USDA's got export demand year over year dropping 350 million bushel. That's a fairly sizable drop from one year to the next. I'm a little skeptical that that happens. You know, you look at the commitments that we have with Mexico right now, and they're pretty much on par for what we've seen in years past, despite all the concerns about building a wall and things like that. So we'll see if that 350 million bushel less on exports is actually there or not. We'll see. That being said, where does that put us as far as a carryover? If we get down to a 161, well, 161 would be 10 bushels off of what the USDA is at currently, right? When you look at the acreage that we have, harvested acreage is going to be around 83 million, 83.5 million.
Even with the drought in North and South Dakota, you think we're going to be 83?
We're just talking about the statistical analysis the USDA uses at this point.
Okay.
So, I mean, I can give you a range of harvested acreage, but right now let's just use 83 for a number. So every bushel we take off of yield, we're taking 83 million bushels off the balance sheet. Mm-hmm. If you do that 10 times, then we're taking 830 million bushels off the balance sheet. If you do that, that's going to put us right at a 1.5 billion bushel carryover if we leave everything else unchanged, mm-hmm. which there would be some small changes there for sure. But I'm already wondering if we might be a little bit low on demand as it is. So I think to some extent that turns out to be a wash. If we're at a 161, I think likely we'll be at a 1.6, 1.65 billion bushel carryover when all is said and done at the end of the year.
Okay. And that puts corn prices at?
Well, that's another great question.
4 1/4.
No, I don't think so.
Okay.
That would be one of the tighter balance, not that it's tight, but that
right.
would be one of the smaller balance sheets that we've seen for a while. And we've seen this recent trend of less corn acreage. So then we have to start talking about buying acreage. So I would say that if we get down to a 161 national average yield, and we do, in fact, hold on to the demand reasonably well, right. and we end up with a 1.6, even a 1.7 billion bushel carryover, I think that's 450 corn, maybe 465, somewhere in that neighborhood.
5 then, pretty quick on a weather scare early in 2018.
Yeah, it's possible. 5 is going to be a very difficult nut to crack, and that a lot of it's going to depend on acreage. I'm wondering if acreage is going to increase by a fair amount next year. When I look at fuel and FERT costs, I think the window is there, or the opportunity is there to see more corn acres for next year. So let's not get there quite yet.
Okay.
But yeah, no, I'm talking about, you know, this new crop where we could get, and again, if we're at a 161, 162 national average yield, I think we're north of, or at least going to test 450 and maybe get above that by a little bit.
All right. Now, we had a couple of questions about the cotton market, and I just want to ask you in general, since we didn't get a chance to discuss it on the program. Mm-hmm. Cotton moved a little bit higher this week. Yeah. We did see the dollar come down. Yep. I haven't kept up this week on cotton exports.
Exports were good this week.
Exports were good. Okay.
Yeah. Exports were good this week, and we tried to kind of run with that. The other news story this week was that there's some flooding in India, which could be potentially a problem. We'll see how long that persists.
Okay.
But it's really kind of difficult to get terribly excited cotton when you've got pretty decent rains down in Texas and forecast for another 1 to 2 inches again. So, yeah, we'll see. It's weather market there too. Okay. On multiple fronts. So we'll see how that plays out. The lower dollar isn't hurting cotton,
right?
But we'll see if we can continue with the better exports. If those better exports continue, though, I'm start to get more friendly cotton longer term.
Okay. All right. Now, we've got a couple of our questions here from our good friend Philip in Ontario, Canada, on Twitter at Agrodome. And his first question, we talked about it, but I think we can get into a little more detail. We noted that soybeans are moving into the critical pod stage, Phil, here in August. Phil wants to know, what timeline are we looking for where rains will or will not make this crop?
Yeah.
Wet spring. What's the trade watching?
It's a good question, Phil, because of the year we've had so far, and we've got a lot that are behind. I mean, we had soybeans that, especially when you look at the Dakotas, didn't make any progress at all for 10, 15 days, and then finally we got a rain, and now they're kind of coming on. You worry about how late we might be this year, and what an early, I'm not saying we will have an early frost, or if that's even on the radar right now, but an early frost would be a very interesting thing this year. I think normally we'd be looking at the first couple weeks of August. Now I think we're looking at second to third, possibly fourth week of August as being the most critical time frame.
Okay.
But then also September. I mean, if we continue to do well, we'll keep adding pods, we'll keep adding. I mean, the next 2 months really is critical for soybeans, and especially with the fact that we're a bit behind. So, yeah, just keep that in mind, and we'll see what weather we have. And as I was saying earlier, I don't think above normal temperatures and normal precip is going to do it for this soybean crop. I think we need to have either normal temperatures and normal precip, or above normal temperatures and above normal precip. But either way, I mean, we're coming from a deficit in a lot of areas,
yes.
so we need to fix that in order to have a really fantastic soybean crop.
Flip question, Phil's second question is, does the corn market believe that that crop is already made? You talked about how we haven't been able to maintain any kind of a weather premium. They just believe we're there.
Yeah.
We're 168 or something, some number, and
right.
We're there.
Right. So after all of the weather talk that we had last year that got the market all excited, and then we had to come crashing down when we realized, hey, wettest drought ever, and ended up with record yields, right? Yep. So this year, we've been very reluctant to put any sort of weather premium in from the get-go. So, I mean, if you want to say that a different way, you could kind of say that the market has believed this corn crop has been made since before we even planted it. And then we threw a little bit extra acreage on top of that, which I've been saying, I'm not surprised by where we ended up with acreage. So, you know, we've seen a couple little blips where the market has had to throw a little bit of weather premium in, but we've taken it away pretty quickly once we get a rain somewhere. Yep. I think the weather market, the weather premium, everything like that, we're just going to go without this year. And then we're going to start figuring out, okay, we're actually doing, you know, ear counts and everything like that. We're actually getting a better idea of what yield might be here at this point. And when we start penciling in that number, then we'll see what that does to a balance sheet and see where we go from there. But we really haven't put that weather premium in. And again, I think another way of saying that is saying we've pretty much acted or factored in this crop as being made since the get-go this year.
All right, so crop tours, end of August, Pro Farmer Tour, and the others, plus harvest is what's going to move this market, if anything will.
Well, I mean, the first thing is we really want to see what the USDA's statistical models, or what they're saying for the August report. We should probably see, well, I mean, who knows with the USDA, but
you expect to see? I
expect to see a reduction on yield. It's just a question of how much. And if they go a little further than what the average trade is guessing, or if they drop it below a 166, I think we've got something there already. I think that market will start to respond to that, because they'll say, oh, hey, there's a problem here, and this could get worse.
Okay,
so
they'll have a bone to chew on.
There you go.
Well, Ted, before we let you go, we do have a question from an Iowa State student who wants to ask you about the future of agriculture. We encourage questions from any students of any age, and you can learn more about this project by listening to the M2M podcast number 143. So, Ted, here's the latest installment of our college-level ag student questions.
As a future agriculturalist, how do we plan to educate the next generation of agriculturalists?
It's a great question, Michaela. How's it going, Michaela? Yeah, you know, we do a fair amount, and us as a firm, Zaner, I mean, something that we've always really kind of prided ourselves on was being educational brokers, and we have for the last 6 years had you know, our program where we try to give back to higher education. So we've gone to Iowa State, we've gone to Virginia Tech, we've gone to University of Nebraska, we've gone to North Dakota, NDSU, North Dakota State University, to get into classrooms and talk about what it is we do, and you know, how to get into the business, and what we do for our clients and things like that. But a large part of it has to be based on the next generation wanting to learn these things, because we do a lot of this stuff outside of the classroom as well. So, you know, come to where we're speaking. A lot of these shows and fairs that we're going to, I mean, they're educational from a whole, not just from a marketing perspective, just from everything, all agriculture. And I think that's very important for the younger generation to do, to really learn. And then finally, learn from your folks and from your relatives. They've been doing it for a long time. They know what they're doing. They've got a lot of knowledge. I know the younger generation doesn't like to hear that and like to, you know, oh, Dad knows more than I do. No, but realize that. And the older you get, the more you will realize that.
Yeah, that's true. That's true. My appreciation for my parents has only grown with time. Yeah, that's a fact. Well, Ted Seifried, thank you so much for taking the time to talk to us. Always appreciate your insight.
Hey, always a pleasure to be here.
Join us again next week when Mark Gold will sit across from me at the market-to-market table, and we will look at the drought slowly creeping across the country. Till then, thanks for watching or listening. I'm Mike Pearson. Have a great week.